Now we're going to hear from Miss Jennifer Britton. She's from Pryor, Oklahoma, and she's been with us 8-9 years. And just overall great customer support from her team. So if you have any needs throughout the year, especially with claims, we can always reach out to her. But anyway, this is Jennifer.
I don't think I'm going to be that fun. What's his name, Chase? Man, yes. Big shoes to fill, literally. I smell his shoes. But I'm going to try, because I kind of do feel at home with you guys. I don't know that anybody ever really feels at home with this bright light and the stage and everything. This is not the normal scene for an insurance agent to be doing a meeting, so it's fun. I'll never forget the first time I was up here. I was shaking like a leaf, and that was about 9 years ago. So a lot has changed, a little bit of gray hair up in here. Don't look too close. But I'm always thankful to get to come back and see each and every one of you. It's nice to see those of you who are still here and have been here all these years with us, and to see a lot of new faces too, and just to feel the energy of the room. Again, this is not the typical kind of meeting that I get to do every day, and so for me, this is actually probably a bigger blessing for me to hang out with you guys for a couple of days than I can be for you. But I hope I can bring some value to your program and just explain how your benefits work, what the value of them are, and then also just impress upon you that my team and I are here to help you and your family members throughout the year whenever you have questions or issues. So, health insurance goes up every year, and everybody always asks me, why is it so expensive? Why does it go up every year? Just to kind of give you the background of what this past year has looked like for Victory Life Church. We had a loss ratio of 91.4%. So that means for every dollar that was paid in premium, $91 or 91 cents, I guess I should have said 100. 91% of that is going out towards claims. And so that means basically Blue Cross Blue Shield didn't make any money. They probably actually lost a little money this year on this particular account, but don't feel sorry for them because they're making it up with others. But I just want to let you know that that's the main reason, honestly, why it gets more expensive every year. Is when we have a year where more money is paid out in claims than is paid in premium, then we've got to, try to get that balance back to some extent. So healthcare just keeps getting more and more expensive. I'm going to talk to you today about some ways you can actually help keep that cost down, not only for the plan itself as a whole, but also for you and your family members as well. So we started off this year with an increase of 7.8% with Blue Cross Blue Shield. That's what they came out with. We were able to negotiate them down to 5.8. So just trying to get that as small as possible. Nobody wants any increase. We'd love a decrease. But these days, if it's less than 15 or 20%, I'm feeling pretty successful at my job, to be really honest. So just to kind of give you some background of where we are and how we got here, you have in front of you probably a packet that looks like this. If you don't, I have them in the back. I'm sorry, I don't think we got them passed out. See, I've gotten so comfortable with you all. I just assume you're going to help yourself to my stuff over there. But we do have, you don't need to follow along because we do have all the information on the slides. There's just some more detail in here that you might want to take home and look at. For example, in the beginning, it has a nice display of all the contacts for all your insurance company, my office, David, eStep's contact information is in there, and then your eligibility rules as well. So for those of you who are new to Victory Life Church, once you've worked here 60 days, you can start your insurance, your benefits the month after that, the first of the month following that 60 days of employment. So we're going to talk about your benefits this year. First of all, starting with your health plan, we are going to be able to stay with Blue Cross Blue Shield this year, so you won't have to change doctors. You won't have to worry about changing your prescription drugs because the formulary is still the same. I will tell you to watch your mail, though, because if they do make a change throughout the year to the prescription coverage or anything else, if a law changes or any rules change, they will notify you by email or paper mail, just depending on how you have your account set up with them. So be sure that you watch for those things because it could be important. A lot of it, I know, seems like junk, but if they change the prescription formulary and you're going to be impacted, they will notify you either by mail or email. So we still have the same two plans in place. They use the Blue Preferred Network. That doesn't mean anything to you if you live in Texas. You can go anywhere in Texas that's a Blue Cross provider. It doesn't matter the brand of the Blue Cross provider. Just go to a Blue Cross provider in Texas and you'll be in the network. Here in Oklahoma, if you use doctors on this side of the Red River, you have to be a little more careful But the main hospital here in Durant and surrounding areas, most of them are all in the network. So again, no change there. Keep going to see the doctors that you're using now. You're not going to be impacted by doing that. We have the two plans. I always feel like the more choices I have, the more value I have in anything. Like, that's why we have grocery stores with 20 different kinds of cereal on the shelf, and they all look kind of alike, but we like choices, right? And so we want to give you choices with your benefits as well, so that you can customize them to whatever meets your family's needs the best. Because someone, if you're 22 years old and single, you're going to probably have a really different perspective of what's important to you when it comes to benefits, as if you're my age, you have a couple of children, a husband, maybe some health conditions have crept up as you've gotten older and things like that. So we want to give you options that will fit what you need the most. And also keeping an eye on your pocketbook. We want to give you options that are less affordable if you need to keep that in check. So you have the two plans. You have the $2,500 deductible plan still, and then the $1,000 plan. So don't forget, if you're on Insure Oklahoma, if you're an Oklahoma resident, you can qualify for that program. It's all based on your household size and income. But if you do qualify, it greatly reduces the cost of your health insurance, and it automatically enrolls you in the $1,000 deductible. Really no changes to your benefits. You still got your office visit copays. So first day of January 2019, when all this begins, you can go see a doctor, and it will either cost you $30 or $20, depending on which plan you're on. And that's really all you have to pay, unless they start doing a lot of diagnostic testing, like labs and x-rays, and then you could get into some more expenses there. Your urgent care benefit on these plans, essentially they're basically the same. I know the one says 50% after deductible, and the other one says copay may apply, but it's really true for both plans. On Blue Cross's paperwork, if you were to look at the actual contract, it'll say exactly that deductible coinsurance applies. Oh, but then maybe you might also get away with just your copay. So this is one of those fun things where, as an insurance agent, I just have to shake my head and say, I'm so sorry, I can't tell you definitively what you would pay when you go to urgent care, because it all depends on how that urgent care bills. So if they bill like they're an emergency room, then you're going to get charged like they're an emergency room. If they bill like they're more of a doctor's office, then you're going to get charged the doctor's office copay. So most of you may be familiar with where they are here in town and which ones charge appropriately at the office visit. If you don't know, you can call our office, or even better, you can contact just people around you and your coworker and say, hey, have you been to urgent care lately? Which one did you go to? Did you only pay $20? Because that's the one I want to go to. I don't want to have to pay my deductible, and that's probably the safest way. You do want to go to urgent care, of course, if you can. Emergency rooms are very expensive, as we'll see in a minute, and they're literally for if something is a life or death threatening. So if you aren't already having a heart attack, when you get to the ER, when you get the bill, you're going to be afraid you are, because it's going to be pretty astronomical. So please stay away from there if at all possible. Your prescription drugs, this is another benefit. All of these we're talking about so far, normally you don't have to worry about your deductible at all. These are first dollar benefits is what we call them. So again, first day on the plan, you can start using these small copays. The prescriptions, you'll see there's multiple tiers there. That's all dependent on how expensive the medication is. So of course, the more expensive the medication to the insurance company, the farther down the tiers will be, and the more expensive it will be for you. The trick is finding the prescription that works best for you, that your doctor is comfortable with, at the least expensive price. And there's all kinds of ways you can figure that out. Most likely your doctor is not going to know how Blue Cross Blue Shield is going to cover those prescriptions. So we do, as members, we've got to get a little more engaged to save some money. You can do a couple of things. You can go, there's an application, there's an app for that. I did bring some flyers back there you can take with you, but Blue Cross does have an app that's really user-friendly. You can shop your prescriptions on there to see which is the least expensive. You can call our office and tell us what you're taking or what your diagnosis is, and we can also help you give you a list of prescriptions and what tiers they're in. Then you can take that back to your doctor and say, hey, the one you prescribed me is $100. This one only cost me $20. Can we talk here? Is this something we can do? And a lot of times, I've done this with my doctor. They're like, sure, I don't know how insurance pays. I just prescribe whatever I think is going to work. But a lot of medications, there's a lot of diagnoses that a lot of different medications will work for. So that's probably the biggest place you can save money besides avoiding the ER when you can. The reason there's this $0 or $10, $10 or $20 type structure on your prescriptions is because Blue Cross Blue Shield has some preferred contracts with certain pharmacies where they are billed less for prescriptions, and so they pass that savings off to you as well. So Walmart, Walgreens are the chains that are most common, that are all in that preferred network, and then there are some smaller ones here around town too, and in the Sherman area. If you like those mom and pop pharmacies that make fudge and have greeting cards and that kind of stuff, they know your name when you walk in the door. They also have those in the network as well. So just a couple of ways you can save some money there on things that you can't avoid using. Most of us, we've got health insurance because we need it. We hope we never have to use it, but it's there to protect us and just to provide that financial security in case there's something catastrophic that comes up in our day-to-day lives. So what we're going to talk about now, this is everything that the deductible does apply to. So the really expensive items like staying in the hospital, having a surgery, MRI, CT scans, those types of services, this is where you're going to have to pay any of that deductible for the year that you haven't already met. So just to remind you, everybody's deductible starts over January 1st. Whether you're on the $2,500 plan or the $1,000, you're going to start at $0. And then every dollar you spend towards that deductible accumulates. Once it's met for the year, it's met. So it may take you 6-8 months to meet that deductible. You may never get there. Or you could do it in the first week on the plan if something were to come up, like an accident or a surgery, hospital stay or something like that, significant. But think about it like your homeowner's insurance. You got to pay that deductible first, then the insurance starts to pay in a portion of it afterwards. So as you can see there on the emergency room, like I said, it's pretty expensive to go there. You'll have a copay first of either $300 or $100, then any part of that deductible that hasn't already been met, and then you're going to have a percentage on the tail end of that as well. Same with your outpatient services and your inpatient services. Inpatient is just staying the night in the hospital. You get a bed, you get a meal, they're going to charge you a little more than if you just drive through, get a surgery, and walk out the back in the same day, okay? That's the difference in inpatient, outpatient. And then at the very end, the bottom line, this is where I really try to get everybody to focus, is the out-of-pocket maximum. So if you come to me and you say, well, my wife's insurance is with Aetna and her company, and it has a deductible of $1,500, the office visits is $10, which one should I do? I'm going to direct you away from those things you just told me and get you to look more at this out-of-pocket maximum down at the bottom. This is your financial security. This is really ultimately what you're buying, in my opinion, when you buy health insurance. So in a year's time, January through December, how much you have liable out of your pocketbook is this out-of-pocket maximum for the year. If you meet it, then Blue Cross Blue Shield will pay 100% of all your claims for the rest of the year. So again, you could do this in early January. If you have a baby, you have a car accident, you have a surgery, you could meet that in the first month. If you do, then you won't pay for any prescriptions or any other services for the rest of the year on that plan. Blue Cross will pay for everything, as long as, of course, it's covered by the contract. Blah, 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 all the contract information, I have to throw it in there. But for everything we've talked about that's covered, you'd either have $3,000 out of pocket total on Plan 2 or $6,000 total on Plan 1. So the goal of all of this is to make it where you have access to care, it's affordable to get your preventative care, which still, by the way, is free. All your checkups and exams and things are free. You can get to the doctor if you get sick or hurt. And then if something catastrophic happens, yes, we do have to pay pretty significant dollars in as well, but we've got the financial protection that most likely we're not going to file bankruptcy if something happens to us or one of our family members. Okay? Is that making sense? So that's really what you're buying there. Let's see what's on my next slide. So this talks about the preferred pharmacy, the local pharmacies, again, that are in the preferred network where you'll get the cheaper medications. Corner Drug, Durant Medical Pharmacies, there's several there locally. And again, just a reminder that if the formulary changes at the first of the year and in July, which is normally when they do that, you will get a notification. So please pay attention to your mail. And if you don't understand what it is or what it means, that's when, again, you can call our office and we'll walk you through it and explain what's going on. So I want to take just a second and talk to you about something you may not know you have. I have these flyers in the back as well, but it's either on the app or if you log into Blue Cross Blue Shield's website as a member and register, you have access to virtual visits with a doctor. So I think this is not only a way to save money, but for me it's just really convenient because I'm busy and I'm lazy. I can't tell you how many times Like I didn't feel well and I knew I needed to go to urgent care and get an antibiotic, but I just didn't want to take the time to go take a half day to go down there. Or, bad mom me, my daughter wakes up in the morning and I don't feel well and I'm like, roll my eyes. Oh, I got to go to urgent care and sit for 3 hours. It's on the other side of town. I live in Pryor and y'all, the other side of town is a whole mile and a half on the other side of town. And so I don't want to go down to there, So I wish I'd have had this when she were little because I think it would have saved me some of my eye rolls that now I get back from her that she's a teenager exponentially get those back. But basically what it is you can call and talk to a doctor on your smartphone, your iPad, your laptop, whatever, and you never have to leave your house, you never have to leave your office. You just tell them your symptoms. Let's say you have a fever, you have a sore throat, you have a little bit of a cough, something like that. If you need an antibiotic, they'll just prescribe it to you over the phone. Tell them what pharmacy you want to go to, and they'll call in your prescription. The beauty of it is not only is it that easy, but you just pay your office visit copay for that. So it's, guaranteed to the $20 or $30 depending on which plan you're on. So I know as a manager now, I loved this when one of my employees came and said, I just did that virtual visit thing with our insurance, which is a different company. I won't name it, but anyway, we have another one. I don't like them as well as y'all's, but she used it. And I loved it as a manager because, again, I didn't have a staff person away from her desk for a couple of hours. I'm thinking as a mom, if I had little kids, the last thing I want to do is drag my 2 or 3 children to urgent care when I know one of them just has an ear infection. I can diagnose that. Doctor, just give me the drug. But I'm taking all 3 of them and myself to sit in urgent care where it's got all the flu bug and all that stuff creeping around. So just remember that's available to you. Pick up that flyer. The network is called MD Live, just in case you want to know. But there's a telephone number. It's on the app, and there's a website, all of that to get connected with it. You do have to sign up and register either at the time of service or go ahead and do it now, and then it's ready to go. Okay? So that's a really great tool to use. The other tool with Blue Cross Blue Shield, I'm going to throw the price up there for you so you can be looking at that. The other tool in the application that would help save you money is a new tool called a cost estimator. So for a lot of those services like surgeries and hospital stays, MRIs, you're going to be paying your deductible and you're going to be paying a percentage of the cost. What we often don't know is how much is the cost. What else do we purchase where we don't know the cost of it before we actually sign up? Right? Why can't we purchase health care or at least have the transparency of health care just like we shop for anything on Amazon? If I want to buy a pair of black Nike tennis shoes, I can just put that in Amazon and I get, 5 different places, right? And all the different prices. You can't do that with health care. You don't even know what they're going to charge you when you go in and they say you need a surgery. It's really hard to get that information. So Blue Cross now has a new tool, again, online and on the app, that if you know you have something coming up, like an MRI, a knee replacement, whatever it is, you just type in the type of service you've been scheduled to have, and it will show you facilities in your network on your plan, and it will rank them in cost and quality. So not just in cost, so you're not going down to the veterinarian's office for your knee replacement, but even though I like my veterinarian, sometimes I'd like to have them over other places, but it will rank them. And what you'll find is, especially with things like MRIs and diagnostics like that, you'll see a huge swing in the cost, anywhere from $13,000 for an MRI down to $1,300 for an MRI, all within your same area code, zip code. It's crazy. So again, that's all money going towards your deductible and your coinsurance that you may have to pay that you're going to save if you just shop around a little bit. And it's safe because once you're logged in as a Blue Cross member, it knows who you are, and it will make sure it sends you to places that are in your network. Okay? Making sense? Is that helpful? 2 things today. Hopefully we learn new, the virtual visits, and then the cost estimator tool. Save you some money. Okay, so let's talk about money. These are your new prices this year. Again, a slight increase. Hopefully things will go well, and you never know. We've had decreases in the past. We've had flat years where we've been able to keep things the same. But I will tell you that Victory Life Church is still paying the majority of the costs for the employee, which is very competitive in the market. And this is what we see in the marketplace. I have about 150 clients now all over the area, and everybody's in the same boat. So it doesn't really matter how big you are, how small you are, even anymore what kind of industry you are. We're all human beings. We're all in America. Our health status is pretty much the same from industry to industry and from group to group these days. And these are per pay period, not monthly. Okay. Let's talk about dental. It's going to go really fast here. So no changes on your dental. Still with Delta Dental. Keep going to their doctors. That's where you're going to save money because they have contracts that protect you. You have 2 plans to choose from. Plan 1 is the least expensive, but it also does not cover any what we call major services. So bridges, crowns, dentures, those types of things are not covered on Plan 1 at all. So if you need those types of services, you're going to need to jump into Plan 2, okay? If you're young, you have great teeth, you have little kids, probably not going to have a lot of dental services needed this year, you could save a little bit of money and stay with Plan 1 if you're comfortable taking that risk. All dental plans have an annual maximum. This one is exactly the opposite of your medical plan annual maximum that I stressed so much a minute ago. This is actually the amount of money that is set aside for you to spend on the plan. So Delta Dental basically has, an account with your name on it, and you each have $1,000 if you're enrolled on the plan to spend in a year's time for any dental care. Once you've spent that $1,000, then the benefit to you is that you keep using their doctors and you get the negotiated down prices. And it's usually about a 50% savings just by using their doctors versus being a cash customer out of the network. So do take the time to find a Delta Dental dentist. It'll make a big difference for you, and you won't have any trouble. It's a huge network, Texas, Oklahoma, all around. Your preventative care on these plans both also is still all free to you. So the cleanings, the x-rays, all that stuff you get twice a year, you don't pay anything for that, so at least go do that. If that's all you do in a year's time, you're getting your money back. You're kind of a net neutral right there. Because people always ask me, well, why am I spending all this money? What do I get for it? On your dental plans, basically, you're paying for the cleanings and the x-rays twice a year. Then if you need services, that's when you start getting into the bank of funds that's kind of accumulated over time, okay? The one thing I'll tell you on dental, my best tip, is that when you are prescribed services other than your cleanings, make sure you ask them for what's called a predetermination of benefits. Think of it like an estimate on your car. I tell you all this all the time. You would never go down to the car collision repair shop, leave a blank check, the keys to your car, and walk away and say, let me know when she's done, I'll be back, right? But that's what I have done so many times when I leave the dentist office after my cleaning and they say, you need a root canal and a crown. I'm like, okay, I have insurance for that. And I just kind of naively walk out the door and go about my business until I go back a few weeks later, I have it done, and then they want payment, and I'm like, whoa, wait a minute. I had no idea how much I was going to be charged. I have insurance for this stuff, right? They pay half of it at least, and we just don't know. So do yourself a favor and ask them, when you schedule it, to contact Delta Dental and get that estimate in writing. Delta Dental will send it to you in the mail. It's a statement, looks kind of like an invoice, tells everything the dentist plans to do, what they will pay and what they won't pay. And what I have found is that a lot of times people call me when they get those and say, so Delta Dental won't pay for a couple of things on here that my dentist wants to do. And everybody's always mad at the insurance company first. I'm like, okay, hold on, just take a break, let me call. And a lot of times if I call the dentist office and tell them, hey, on this root canal, you've got 4 services for what I consider one service. 2 of those codes aren't covered by Delta. Can you bill this differently? Can you give them a discount or something? Sometimes they'll write it off completely. Sometimes they'll say, yeah, we can give them a cash discount of 50%. So you just got to ask those questions and be engaged because they're not going to spend your money as well as you spend your money. And I'm going to help you spend your money better, even though it's not my money. I'm invested in helping you guys because, again, I've got to come back next year. And I hope that all the time we spend educating you and the time that Victory Life takes aside to have you come here and put the effort into this, that it's valuable and helpful, because I only get you once a year unless you call me. So I try to impart as much wisdom as I can. As I learn, I've been doing this for 18 years, going on 19 now. And every year, it's like almost daily, I still learn something new. So don't feel bad about reaching out, even if it's multiple times with questions. That's why we're here, and we really do want to help you. Rather have healthy people that learn than people that are frustrated, because that's our challenge, because it's frustrating enough as it is just dealing with insurance. Okay, so here's your cost for your dental plan. Again, the 2, plan 1 being the less expensive, because remember, it doesn't cover major services like crowns, bridges, and dentures, and implants. Those things wouldn't be covered on plan 1. Alrighty, and then your vision plan is with MetLife. No changes again. Easy breezy this year, right? Boring you to tears. I know, but sometimes boring is good. When it comes to health insurance, no change is good for the most part. So we're just going to be thankful for that this year. Again, with your vision, you go to the doctor, you get that exam, it's $10. You walk in, walk out, you're done. If you need glasses, lenses, or frames, you're going to pay a $25 material copay for that. But you guys know, nobody gets a $25 pair of glasses. There's always extra charges. So here again, just be careful when you're ordering them at the end of your appointment to ask as they are asking you what all you want to add on. Just ask them every time, well, maybe, I don't know, how much is that going to cost? Because you might be surprised again what's covered and what isn't and how much it isn't covered. Your benefits all renew every 12 months. So if you haven't been to the eye doctor in the last 12 months, it's time to go. If you have to wait literally 365 days before you can use the benefit again, okay? It's using the VSP network, so no problem finding eye doctors out there. There's hundreds of them in the area. And here's your cost per pay period. So the other benefits have stayed pretty static on price. Again, it's a good thing. And the medical just went up really a tiny bit this year, considering relatively what I see in the market. Your life insurance benefit that's provided to all of you who are full-time is $25,000. You don't pay for that. That's something the ministry invests in you. And if you should die of an accident, there's an additional $25,000 that pays out. So part of your open enrollment process every year is for me to remind you to keep those beneficiaries up to date. And that the beneficiary is the person that if something happens and you should pass, who gets that $25,000 or $50,000 check, or checks if you want to divide that up. So be thinking about that over the next couple of days. Be thoughtful about who you choose. For example, if you choose a child who's under 18, those funds are put into a trust until the child turns 18. They won't have access to them. So if that's what you want, I just want to make sure you're aware that that's how it will work. The other thing is, and it just escaped me, you can change your beneficiary anytime throughout the year, just so you know, and you can divide it up as many ways as you want to, like 20% to this child, 40% to another, and what's left, another 40% to your aunt. However you want to do it, that's fine. That's your decision. If you're still working at age 65, the benefit does reduce down by 35%, and then again it reduces at 70 to 50% of whatever the original amount was, so it'd be about $12,500. It has an accelerated death benefit, so upon diagnosis of a terminal illness, you could cash this out and use it for anything you wanted to. And you can convert it to an individual policy. If you ever leave employment, you can take it with you. You might not like the price, I'll warn you, but it is there if you want to take it on. You can buy more life insurance now. Let me just tell you all you know that if you've already been here past one open enrollment and you've already gone through your new hire process, that if you want to buy more life insurance at this point, you have to fill out a health statement or a evidence of insurability. We like our big fancy words in health insurance, and that way we can have another acronym called an EOI in our world. So, but it's a health questionnaire, and they're just going to make sure that in MetLife size, you're an insurable risk that they want to take on. How does that sound? That sounds really politically correct, doesn't it? So they just want to make sure you're healthy enough that they want to put, whatever amount of life insurance out there that you've requested. If you're a new hire, then you're guaranteed $100,000. I'll swip over to that. $100,000 for new hires, $25,000 for your spouses if you enroll, and then $10,000 for your kids. There's no age reduction on the voluntary life, so that's kind of nice. When you turn 65, you get to keep your full benefit. It does come with a free will preparation service with MetLife, so you can go to metlife.com, put in your account number, and if you don't know that, Miss Elena and our teams can help you with it, but it's free. You can fill out a will, a living will, some simple estate paperwork and that kind of stuff right there online, and it's a binding document as long as you have it notarized. Okay, and there's no change in their rates unless you're going up in age bracket. So if you're going from 49 to 50 years old, you'll see a little increase in your cost. Every 5 years, there's an age bracket change on the rate. Okay, and we're just on the downhill slide, guys. The cafeteria plan, this is something that, if you're my age or older, like this was a word that people used to actually know. Well, they'd say, is that a cafeteria plan? People really don't even talk about that anymore. But basically, you probably all know that your benefits, for the most part, are taken out of your paycheck before any taxes are calculated. So that's tax-free money. So it just helps you with those things to keep the cost down just a little bit more. What it also does, though, with the IRS is it limits when you can make changes to what you have. So this is the one time of the year where you can change what benefit you have just because you want to. You can drop spouses, add children, go from one dental plan to the other, etc., without any reason. Once we get past January 1st, though, the IRS locks it down. So you have to have one of these reasons in their eyes to make the change. So if, June comes around, guys, you want to go buy a new boat and your health insurance is in the way of that, don't come tell Miss Elena that you want to drop your health insurance to buy a new boat because she's going to say, I'm so sorry, I can't. Not her rule, that's the IRS rule, okay? So you'll remember that now, won't you? Because I got to something fun, right? And ladies, I don't know, I take a lot of pair of shoes, but I could probably spend enough in shoes to, make up my medical plan deduction, so I'll use that for us girls. Can't go buy new shoes and drop your health insurance. Now I'm fair. I got both sides of genders. Okay, so flexible spending account. This is one of my favorite benefits. It's not insurance, but it's a way to save money on your money. I had a very wise HR person back when I was in my 20s who pretty much strong-armed me to do this, which now I realize was totally wrong. She should have never done that. But I'm thankful she did it because I ended up using it for braces and a couple of other things that had she not convinced me to, honestly, I probably wouldn't have been able to afford to get those things done, at least not the way I did it. So what you can do is you can tell payroll that you want to have a certain amount of money taken out of your check, again, before any taxes are calculated. And it's basically put aside into a quote-unquote account for you so that when you have a qualified medical, dental, or vision expense, you use those funds instead of money out of your regular bank account. What's really nice about it, besides it's tax-free money, is that all of that money is available the first day of the plan. So let's say you put $500 in there for the entire year. You're going to see a payroll deduction every couple of weeks that equals, a 24th of that throughout the year. So a very small number. But on January 1st, you could go out and have dental work or get an MRI or whatever and essentially spend the whole $500, and they're just going to continue to take little chunks out of each paycheck. Does that make sense? So it's kind of like an advance with no interest, plus you save tax money, and it's really convenient. So this year with the rules, there's always a limit. You can put $2,650 a year aside into this account. Just make sure that you are aware that if you haven't spent it all down by the end of December, you do lose anything that's left in there. So plan carefully. Miss Elena is on the spot. She can tell you what your balance is. If you're not sure this year what you have left over, you definitely want to take some effort to go spend that down because you will lose it. Even if you have to go to a website like FSAstore.com or Walgreens.com, those types of websites all have whole pages of stuff you can spend your FSA money on. It may be stuff that you're using. It may be stuff that, you want to just put a first aid kit out in the garage, just in case. Just spend that money in some way or another. And everybody in your household, their expenses are eligible to be used for this out of this fund. So you don't have to be on the medical plan here. Your kids don't have to be. If the kids go down to the dentist or to the urgent care or something, you can still use these funds to pay for their claim because it's your money. They don't have to be on the plans. So it's a really great way to save money. This is a second type of account with the same name, but this is specifically for dependent care. So daycare, child care, after-school care programs, and now even more commonly, we're seeing more and more people who need to pay for care for their parents while they're gone to work. Someone to come sit with mom or dad while you're at the office. You can use up to $5,000 a year through this same kind of fund, tax-free for those types of expenses. The difference with this one is it's not pre-funded totally, so if you've only had $100 deducted out of your paycheck at that time, then that's as much as you can actually get reimbursed for your expenses. So it's not front-end loaded like the medical side is. This one's more of a pay-as-you-go, but you're still saving the tax money, okay? All right, so you have action to take, and Miss Elena is going to give you more details about what that looks like with ADP. Thank you guys for your time. One last brochure I have up here while she's coming. I do have a list of eligible FSA expenses in the back if you want to see what those look like. But thanks so much. I know it's kind of routine and mundane this year. Feels a little bit like it, but for me that's exciting because no huge changes and small increase. And I just appreciate your time and appreciate you guys being with us.
Thank you, Jennifer. All right. At this time, is Ryan here? Okay, I didn't see you there. All right, we're going to have Ryan Lawrence come and talk to us. So Ryan is with Northwestern Mutual, and you guys, you don't know what you don't know. So we have information, he has information, he has years of experience to share with us. Even though you might not think about investing right now, what can you plan to do? Anyway, just a resource, and just want to challenge you. If you haven't met with him yet, please do so. And if he sends you an email, even just respond like, I would not like a meeting at this time. But anyway, just a response would be great. But anyway, let's give our attention to Ryan.
Thank you. Microphone? I wanted to pass these out. You mind?
I don't mind.
Well, you can just start it. I'm going to thank you guys. I don't know really the significance of the music. I just look at those two guys back there and think they're always up to something. So, but Elena's going to pass around a form. If you have filled one out in the past, basically it's a form that I've asked everyone to fill out in the past. If you have questions, if you say, I want to meet about a particular topic, fill that out and just leave it, and I'll pick it up or bring it to me, because inevitably at this meeting, I look forward to this meeting every year. I really look forward to seeing you guys. I really like you guys. And inevitably somebody will come up afterward and say, hey, I need to meet with you about this or that. And that's fine. Usually there's a list or a line of people that say, I need to talk to you about this, especially after all these years. This is my 5th time standing up here before you guys. So time is just, it's moving quickly. But I love every second of it. I love the fact that we moved to Durant now 3 years ago. I love this church, and I love the people that I get to work with. And just to give you a little background before we explain a little bit more, you can go ahead and put the slide up there if you want, because we're going to chat. But most of the time when you get into the financial industry, they inevitably will tell you, look, if you really want to be successful at this, you're going to have to work in the medical industry. You're going to have to get in front of a lot of doctors. You're going to have to work with a lot of lawyers because they have more disposable income. And that may be true, but the reality is I wake up every day and I get to work with people that I really enjoy being with and being around. And I'm very blessed to be here. So I think that if we look at it from the perspective of the kingdom of God, I think that we all have a bright future ahead of us, and I think God has a plan for this church and for you as individuals. And I feel like that we're trying to get things right. And I feel like it's not a waste of time to meet with people that like yourself, because I feel like that God's got a great plan for Durant and for Victory Life and for all the locations and for you as individuals, and we want to be good stewards. So I feel like that there's something significant about that when we start looking at the details. And I want to just tell you a little bit about what I do. I know many of you, but I still feel like that I need to be really clear, okay? I help my clients create financial security for themselves and their families, okay? Achieving financial security means different things to different people. It's generally built on 3 main components, okay? First thing you'll see up there on the bottom in blue is managing risk or risk management, the accumulation of wealth, and preserving and distributing that wealth down the road, okay? Together, we create an offensive and defensive strategy to make that work and to help you achieve your goals. First components, we manage risk. It's protection against the unexpected. I'll just say this, and I'll be brief, but when I first got into this industry, I probably called several thousands of people and said, hey, this is what I'm doing, would you like to meet? I started making a list of people that I offered to meet with and didn't want to meet with me or chose not to meet with me that are now dead. And unfortunately, that list kept growing and kept growing to the point where it's too long now, okay? becoming sick or injured or unable to work, we want to keep things on track regardless of life throws you a curve, okay? Once the risk is addressed, okay? I tell people I've lived in Oklahoma for a long time. I've never seen a tornado, but I've seen the effect of a tornado. I've seen neighborhoods that have been completely leveled. The only thing that still exists after a tornado comes through on every piece of property is the foundation, okay? When you're building a house, nobody comes over and has a groundbreaking ceremony or cuts a ribbon on the foundation. They wait until the house is built, but the foundation is very important, okay? My financial planning process can really consist of 4 steps, okay? First, we get to know each other. I want to hear your goals, okay? I want to hear where you are at this point, whether it's good, bad, or indifferent, okay? I always tell people if we're going to be successful at this, we're going to spend some time together, all right? Next, I take the information that you give me and I analyze it. And many of you have heard the expression, we're going to put together a plan, and we're going to start that plan, okay? It allows us to see if you're on track and what we need to get there. Now, I tell people this the first time we meet. Sometimes it's not a great meeting. Sometimes people aren't very happy with where their finances are. But I can tell you this, the year later or 2 years later or 3 years later now, when we get back together and we compare our current status with where we were 3 years ago, there's a lot more hope. Okay, we're making progress. May not be the kind of progress as fast as you want, but we're making it. Okay? This is where we get objective. Okay, sometimes meetings are very unique. They're never the same for everybody because they're based on the information that you've shared with me in our first meeting, our second meeting, and third meeting. Okay? We continue to work the plan. Whatever's going to help you achieve your goals. Okay? The final step is we're going to continue to update the plan. We're going to continue to adjust as we go. Every year something different is going to be happening. You'd be surprised and amazed how much 3 and 4 years makes a difference in somebody's life financially. Okay? Once again, I don't think you're going to remember what your balance sheet was 5 years ago, but if it's increasing every year and it's growing, then we're heading in the right direction. Okay? Sometimes it's the little things, right? A couple things that I want to point out too, okay? First off, you've got a lot of access to a lot of things here. You've got group plans that allow you to get life insurance. You can get life insurance a lot of different places, okay? If you recall, it's good to remind you of this, Victory Life has taken out a long-term disability policy on all full-time employees that will cover 60% of your current income, which is realistically more like 80% because it comes in and they don't tax it, meaning, no, I'm sorry, if you get the supplement, it will come through without paying tax on it, okay? Victory Life has taken out that plan for every one of you. 60% by law is as much as they're allowed to take out. Simply put, because if somebody gets paid more than 60% of their income and the disability no longer exists, they're not quite as motivated to go back to work if they're getting paid what they got paid before the disability. That's why it's 60%, okay? One of the things that we've met about is you can add a little tiny supplement to that disability policy that will take you almost to 100%. And your out-of-pocket expense is not very high. Probably around anywhere from $10 to $15 a person, depending on your age, on up a little bit. But if you can insure 100% of your income until you're 67, that's one of the best plans there are. No offense to Aflac, but there's 3 to 6 months, and I can take you all the way to 67. So, which if you ask any financial planner or if you listen to Dave Ramsey, they will be honest and tell you the biggest effect on a financial plan is the fact that you can no longer work, but you still have bills. A long-term disability is the biggest deterrent to actually reaching your goals because of those financial obligations, okay? Obviously, we do have a 403B plan, which is like a 401k for a church. It's a nonprofit 401k, okay? You also have access, anybody that wants to open up a Roth IRA is eligible to do so. You can open up one in your name. You can open up one in your spouse's name if you're married, okay? The limits will go up next year. In case you're wondering, it used to be $5,500 is the max you could put into a Roth IRA. Just a reminder, a Roth IRA is you putting money into an account. That money should grow, in theory, and you will never pay a cent of income tax on any of it, ever. Because the IRS says that you can invest up to $5,500. Next year it will be up to $6,000, which is the first time they've changed that in the many years that I've done this. Thank you, Trump. As well as some other investments that really won't affect you initially right now. But I think the Roth IRA is always going to be something that we continue to promote because nobody really wants to pay taxes, and if you don't have to pay taxes, you shouldn't. So I always encourage that because I feel like that's the best place to park your money to get started. The age of retirement right now, meaning if you have a 401k or a 403b and or a traditional IRA that you have not paid any taxes on, the longest you can have that money is 70 years and 6 months, up to 71 roughly. That just means that if you don't take that money out of your account and start paying taxes on it, the IRS will penalize you heavily. There's very strong consideration that because we're all living longer, we're all working longer, that they will allow you to push that further, probably to 72 or 73. That's probably something that will happen very soon. The reality is, the age of 65, which most of us consider to be retirement age for many years, that number was based on the fact that you probably were going to live to be 66. So the government wasn't really that concerned. If they were going to pay you Social Security, they were thinking you weren't going to live that long anyway. Well, we're obviously living a lot older, and people are working a lot more and a lot older than they used to. Many reasons for that. Some of them have to, some of them want to. And as I've said before, we're not our grandparents' generation. We're not content sitting at home and watching television after retirement. We're out doing things. Our lifestyles have changed, and so people want to work longer to ensure that they have the freedoms in their lifestyle. So that may change. We may end up working to 75 by the time I'm that age and living to be over 90. It's very realistic. So that just may affect the way that you think about things as well. So I just obviously want to tell you guys thank you. I appreciate being allowed to work with you guys. And if you have any questions, then just fill out that form and I'll pick it up and we can meet again. Many of you are going to meet again anyway soon. So I think my job is simple. You just find me.
All right, thank you, Ryan. Next, we're going to hear from David Estep. And if I can get Mark and Daniel to pass out these folders here. David is with Aflac, and he's been with us for a lot of years. Again, customer support is a 10 to 11. It rates pretty high up there. He likes to meet with everybody, add a personal touch to what he provides, and helps with claims. Anyway, David, if you want to come, I know I see some ducks. I think you're going to give away some ducks. I've got the tickets down there.
Thank you. Good afternoon. We don't have long-term disability, but we've got the duck. Where's Ryan at? We got the duck. And I want to give one of these ducks away right now, and Elena is going to draw somebody's name out.
Black.
6 digits, 506035. All right. All right, we've got one more duck here. Five zero six 061. see if I can make it. All right. So I'm pretty accurate with the throw. I got 6 grandsons, and they know that they can look at the back of Pawpaw's pickup and they see a football no matter any time they get in there. So we're throwing, we're pitching. So that's one of the great things about having 6 grandsons and 3 granddaughters. Just want to say this afternoon, Victory Life, thank you so much for letting us be a part of your benefit program for 18, 19 years now. We appreciate it very much. It means a lot to us. I've got some lifelong friends in this room, and we are so honored to be a part of your benefit program. And we look forward to that for many years down the road. I want to say thank you for what you do in our community, in all of the communities that you are in, for the lives that you touch on a daily basis, because you're not only affecting lives now, but generations in the future. And thank you very much for what you do. We appreciate that. I want you to know that even though I represent Aflac, I work for you. So down the road, if you need something as a policyholder, feel free to call me. And in our packet on the right-hand side, I've got my one of my cards, and it has got my cell phone there. So feel free to call me anytime if I can ever help you as a policyholder, if you ever have questions. Just want to let you know that right here in Durant, Oklahoma, we have close access to one of the largest, I say largest, as far as production and number of agents, regional offices in the United States, right here at 2929 West Main here in Durant. So anytime that you ever have a question or you need help or you need assistance with a claim, feel free to come in and we will help you in any way that we can. Molly and Renee are continually uploading claims and assisting policyholders every day. So feel free to come in. We're just a few blocks from there right now. Has everyone got a packet? I just want to highlight the benefits that are available to you. We have our accident policy. We have a critical illness benefit rider. We call it a plus rider. We have short-term disability for 3 months and 6 months. We have a cancer policy. We have a critical care protection policy for heart attack and strokes. And then we have our hospital indemnity that will pay so much per day if you're confined to the hospital. Keep in mind that our products pay on top of anything else that you have, and they always are paid directly to you, so you use those benefits any way that you need to, primarily with deductibles and co-pays, out-of-pocket expenses. Our most popular benefit that we have with Aflac is our accident policy, and if you pulled out the brown brochure and flipped over 2 pages, over on the left-hand side is a list of our benefits. And there's 24 there. On or off the job, our accident policy pays benefits if you get hurt in an accident. The minimum we pay for an accidental injury is $120. When we talk about accidents, we're talking about trips, falls, cuts, breaks. How many in here drive a car? One of the most dangerous things we do every day that we don't think about. One of the most dangerous places that we are every day is in our home. How many folks in the last year have climbed up on a ladder? I can't tell you how many times a year that we pay claims on folks who fall off ladder. Most of the time it's not serious, but sometimes it is serious. Your home is one of the most dangerous places that there are when it comes to accidental injuries. And our policies can help out, you know, whether it's at home or at work or driving up down the highway. How many here have a four-wheeler or a motorcycle? Okay. How many work around cattle? All of those things are dangerous, or a farm. How many have kids? All right. So you kind of get the picture. And I'm not going to cover everything on our policy, but I just want you to know that there are major benefits to help out. Over the years, I have seen our policy literally save folks from losing their home or losing a lot of their other assets that they would have had to have sold and gotten rid of just in order to survive. And that's where our products come in and help out. I call this packet the crazy packet because when crazy things happen, this is where our policies come in and help out. The accident policy has got 24 benefits. To highlight some of those things you wouldn't think about. You know it would pay a benefit if you fractured an arm, but we also have a broken tooth that is repaired with a crown, $500 benefit. I can't tell you how many times we've paid benefits in those areas just in the last year in some of my policyholders. If you're eating food and break a tooth, we count that as an accident. Be sure and tell your dentist how that happened. There is a wellness benefit of $60. So once a year, if you go have an eye exam or a dental exam or a flu shot, you get $60 back. Keep in mind that there is an accidental death benefit on this particular version of $50,000 that goes to your beneficiary. Our Plus Rider on the blue brochure will pay $5,000 upon a new onset of any of the 15 things listed. Heart attack, stroke, coma, paralysis, type 1 diabetes. It also has a second level, and this is a rider, by the way, that you can add to your accident policy. A second level that will pay $1,250 for some other crazy things like Lyme's disease. If you look at our short-term disability brochure, actually on the left-hand side of our packet are our rate sheets. And if you go kind of toward the bottom of the first page, we have our short-term disability rates. Short-term disability is going to pay benefits directly to you if you are disabled from either an off-the-job accident or a covered sickness. Covered sickness is going to be something that's not, we have a pre-existing clause for the first 12 months that you have the policy. But if you look at our short-term disability rates, it's kind of based on your income as far as what you qualify for. If you make $22,000 a year, $1,100 a month is the monthly benefit. For a 3-month benefit, if you're between 1849, it's $1645 per pay period. So you can kind of get an idea of how much it costs. It's very important. We insure our lives, our homes, our cars, but it's important, as Ryan mentioned, to insure our paychecks as well. These rates are per paycheck, per pay period as well. The green brochure is our cancer policy, and there's over 30 benefits there. And everyone in this room has been affected by cancer in one way or the other through either ourselves or our family. And one of the most devastating things about it is the cost and the expense. Major medical is the big payer of the bill, but there's all of those out-of-pocket expenses that you don't think about that come into play, deductibles and co-pays, travel, having to go to a major center like Dallas or Oklahoma City or Tulsa to be treated, or even to MD Anderson in Houston. All of that costs money. So even though your major medical may pay the biggest part of the expense, there's still a lot of out-of-pocket expense you don't think about. We have our pink brochure, which is our critical illness, critical care protection, specified health event. If you turn over a couple of pages for a heart attack and stroke, you can see what the benefits are. First occurrence benefit, $7,500. It also pays for angioplasty, a benefit for angioplasty, hospital confinement of $300 a day, continuing care benefits. And then we have our hospital confinement policy, and you have a choice when you enroll in that whether or not you want it to pay the $500 for a 24-hour period stay in the hospital or $1,000. There's options on that. Our short-term disability and our hospital confinement are benefits that you can use for pregnancy. So keep that in mind. So this afternoon, I'm going to be in the back, and I'm going to be helping with paperwork. If you're interested in, as Elena talked about, making changes or doing something different, or adding to anything that you've got, now's the time to do that. Changes will take effect the first of the year. As Jennifer mentioned, it's a good idea to keep your beneficiaries updated. If you need to make a change, or if your life has changed this year in some way, one way or the other, and you think you need to make some changes on your AFLAC benefits, let me know so that we can update those and make those changes. So just keep in mind that we're here to serve you in any way that we can. And Elena, are you going to open up for questions here in just a minute? Okay. Thank you, guys.
Thank you, David. I kind of have forgotten about questions. So let's see. Does anybody have any questions about any of the insurance policies or anything like that? No? Okay. If you do have some specific questions, you're welcome to get with them after the meeting. I just want to keep your attention for a few more minutes and go over some next actions. Do you have some next slides? There were some slides I sent for, looks like that maybe. Did I send those to you? Maybe not. Okay, it's all good. First, let's talk about David Estep's, the paperwork in his file. There's 2 forms you've seen. Most of you have seen these before. So on the short form, if you'll go ahead and put your name at the very top, and then when you meet with him, he can tell you the rest of the places to sign and initial. On the long form, at the very top where it says employer, Victory Life Church, or where I believe everybody in here is employed. If you're Academy, you can put Academy. And go ahead and fill out your personal information, social, name, all that good stuff. And then again, when you meet with him, you can fill out and initial the bottom parts and sign that. Normally we have signed up with FSA at the bottom of this form, but we're going to, you'll go elect FSA, medical or dependent, on ADP now. With our open enrollment, it goes with all your other benefits. So open enrollment, now we're not using Employee Navigator like we did last year. Everything is on ADP. We're pushing so many things to ADP now. You're going to get very, very familiar with it. The website, and you cannot do this on the app, so it has to be on a PC. So the website is workforcenow.adp.com, and I can email this to you, so you don't have to get that all right now. But I'll repeat it, workforcenow.adp.com. And when you get logged in this very next time, what you're going to see is a pop-up that says, welcome to open enrollment for 2019. And at the very bottom, there'll be a green box and say, start this enrollment. And it's just going to take you through some very, very simple steps. You're going to be really, I think you'll be surprised at how easy this is going to be. Just a few screens. Not a lot to navigate through. If you have any trouble at all walking through it, you just get with me. Don't sit in your frustration about this. Just pick up the phone, email me, and I'll be there to help you with that. So once you start the enrollment, you can say finish later. It's not something that if you say start this enrollment now, like today, you don't have to make decisions today, okay? You still have, the open enrollment process is going to end on the 28th. So it's live right now when you log into ADP, but it will close down on the 28th. So what you're going to see is when you just, the first screen you're going to see when you say start this enrollment, it's going to say review your dependents and your beneficiaries. So your dependents, who you should see on there, is your spouse and all your household members, your children. And those should be listed as dependents. If you don't see them there, you can go and add those there. Also, you can add beneficiaries if you want to name your mom or your aunt. You can name a beneficiary who is not necessarily your dependent, okay? That's just in the same action. It will say they're just a beneficiary, not a dependent. So again, very, very simple process. So once you've done that, the next screen will be all of your options, and you just click the first one, click the second one, you just go down the line. And even though you may know now that you don't want anything, just go ahead and click, tell the system that you've looked at each one of those, medical, dental, vision, life, and you can waive those. So once it's waived, it'll just ask you a reason, and you just do the drop-down box, pick the best reason for you that fits your situation, and you can waive that. So once you click the first one, if you see a green thing over a plan, that tells you that's the one you're enrolled in. If you want to unenroll, you have to click unenroll, okay? What's going to happen this year is whatever you're enrolled in today, you will continue to be enrolled in on January 1 unless you turn it off, okay? So nobody's losing anything. If you don't do anything, you'll keep the same plans that you had as 2018. Any questions on that? So, and then you'll just finalize that enrollment. I will email out these screenshots since we couldn't see them up here. So I'll email these out tomorrow, okay? So that you feel more comfortable with what you're looking at. You don't feel as lost. So let me talk about, just for a moment, also Ryan had some papers that were passed out that we didn't have enough of on this side. If you want to set an appointment with him and don't have his contact information, you can find him at the back. If you miss him somehow, you can email me and I can get you that contact information for him, for you, his contact information for you. So these next action steps, if you don't mind, take a picture with your phone. I don't want people walking away and saying, oh, I forgot what to do. I just want these to be in front of you so you have the website and meet with David and then these dates here. So if you don't mind walking through that. And then, one of the things when you get into your ADP, very, very important, please check your address. If you've moved in the year and not told me, not updated ADP on your own, please look at that, because if we mail out W-2s, I know that Blue Cross sends out forms at the end of year on their own. They don't mail them to us. But if your address is updated in ADP, it does get updated in Blue Cross's website if you're enrolled in that, okay? Very, very important, because you'll need that form for your taxes. Okay, one last thing. So the open enrollment, I'm saying, ends on the 28th, okay? So you've seen the statistics about, Christina and I managing 329 W-2 employees, okay? If I need for the majority of you guys to finish this by the 28th, it's going to turn off. But if there's a family situation, if there's a situation that you need to change something after the 28th, let's say that you've elected the high deductible or the low deductible plan, but the highest cost, $1,000 plan with Blue Cross, and you're good with the price, you're good with that payroll deduction, but then your husband loses his job right after this date, and you're like, oh, I need to change that to the cheaper plan. You still can. You really have until December 31st, and it kind of scares me to tell you guys that y'all have that long. So, but you have that ability, and it'll be in the slides of where to go to make changes after the open enrollment process closes down in ADP, okay? I want to make sure I'm clear on that. So open enrollment is a cycle that ADP will open up and shut down at the time frame, these certain dates, but you still, until the end of December, because open enrollment, the new plans start January 1, they're effective January 1, you still have through December to make any tweaks or changes necessary after this date. So I hope I'm clear on that.